John, we always start with the macro stuff. Again, plenty to talk about. We've got Bitcoin up in the past 30 days, over 30%, up $27,000 per coin in the past 30 days. Bull market back in earnest.
Bitcoin didn't spend that much time above 103 earlier this year. It was up quick to 109 and then quick back down. That's definitely noteworthy. We had a Fed meeting this week. There's actually not a ton to report from that. Wait and see was like the tagline that everyone was tweeting. Jerome Powell literally said the phrase wait and see like at least 5 times, literally when he was giving comments. And you can understand the position that in. There's tariffs and back and forth trade negotiations happening that have not really happened in most of our lifetime. So the Fed doesn't really know what the impacts of these things are going to be. So they are waiting and seeing to see how tariffs impact things like employment, like inflation. They held rates constant, not too much of a surprise. But if you guys are listeners of this show, we're not really Fed hawks to say, oh, the Fed cut 25 basis points. That means some crazy implications for the market. We don't really view it that way, but they're holding tight for now. That was a Fed meeting. Other macro stuff that happened this week. So there was a UK trade announcement. I think details are still to come on that, but you have to look bigger picture here. What caused Bitcoin to sell off? Almost exactly a month ago, we hit the lows. You can mark that because Stephen Lupka tweeted, feels like the low here. And vibes were like correct to the hour almost.
Nailed it.
Ridiculous. Yeah, it was like almost exactly a month when Bitcoin hit that low below 80K, like roughly 75K. And everyone knew we needed clarity. It was because of the trade war situation, tariffs, trade war, uncertainty. Everyone knew we would need clarity for Bitcoin to rally back up above 100. I'll admit that there hasn't been that much clarity on the trade war situation, and Bitcoin has already rallied above 100.
Correct.
So I think that's a pretty big signal. It just shows that there's big buyers in the market. Bitcoin kind of is behaving like this coiled spring where there's just a little bit of good news, a little bit of clarity, and Bitcoin is front running that. So I think that's a big deal. There's some other things we should get into about, it seems like the back and forth between the US and China is lightening up. It's far from being any sort of resolution, but there have been positive headlines, which I think is what also has helped Bitcoin and the markets in general. So that's just like a quick macro summary. I'm sure you guys want to add some color to that.
We've been talking about showing charts the last couple of episodes about M2 rising, liquidity coming into the market, and that's very reliably predicting a Bitcoin push up in price. And we're seeing that happen. I think maybe it has something to do with the M2 supply increasing, also the factors you talked about. But those charts, the M2 charts, were definitely predicting a move like this.
Absolutely. Yeah, no, it's wild. There's a lot of back and forth on the statistical validity or like how to relate those things. I remember tweeting at the time, I think this is one of those things where people are going to argue about whether it's real or not. And either way, it's going to look like it was. And we absolutely got that. I think to follow on some of John's points. Yeah, so Trump recently floated an 80% tariff for China, which is down from 145. So obviously that is a big reduction, still an extraordinarily high tariff rate, but moving in the right direction. You're having Secretary Bessent is going to be taking the first meeting with one of their head economic advisors. So things are moving in the right direction there. And they're also trade deals with the UK. It did end up sticking a 10% universal tariff rate, but honestly, that's something I think the market can handle. So you're seeing just this wide improvement across the board. You did have Trump say you should go buy stocks again. Last time he said it was before the 90-day tariff extension. So again, this is what I was talking about at the time that I was talking about the bottom being after the first week of April, is you see the administration switch from talking down the market to talking up the market. And that's the key here, right? Prior to April 9th, all the messaging out of the White House was effectively, they don't care about Wall Street. They care about Main Street. They're willing to take some pain on Wall Street to make things better on Main Street. Post April 9th, post that bottom with that 90-day tariff exemption, bringing Bessent in for Lutnick, the messaging from the White House continues to be, the stock market's going to do fine. You should buy stocks. Trade deals coming. We're going to grow, like blah, blah, blah. They're now talking up the market instead of talking down the market. That was the signpost for people, I think, to adjust positioning on. And if you had cash or you were sidelined or you had hedged something, that was your signal to like deploy cash and enter the market.
I gotta say, it is nice that Trump shares his insider trading alpha with all of us.
Everybody.
Which is unusual for a politician.
Yeah. I don't think it's insider trading if the entire country hears about it at the same time.
Exactly.
That's his out.
Outsider trading.
Yeah, it's outsider trading. So it is somewhat convenient. And yeah, just a huge shift there. And it's a shift that continues to play out. Trade deals, de-escalation, talking up the market. He needs to see that happen. Now, the remarkable point is what John said, and it's that in all of that, Bitcoin has heavily outperformed the S&P. The S&P is somewhere around 5,5700, something like that. I haven't looked at it today. Bitcoin's at 103, 104, floating in this zone, inches from an all-time high, under 4% from the all-time high. The S&P would have to go from 5,700 to the low 6,000s to be back above an all-time high. Bitcoin has outperformed it heavily on the way up. And this is a theme that we've been hitting on the show, that Bitcoin is a beneficiary of both environments. It is a beneficiary of risk on asset growth sentiment returning. And it's also a beneficiary of a changing economic order. And so it's really been this beautiful asset to own at this juncture where it's going to do well regardless of which path we take in most cases.
Yeah, you hit my take there, Stephen. One thing I'm more excited this time around going over 100K.
Yes.
I don't know if that's shared. Yeah, same. I hope we hang out here longer. And I think there's plenty of signs showing that we will. One being that no matter what happens, either side of this play, coin is going to win. And I did look at the numbers this morning, Stephen. Both NASDAQ and SM are right around negative 0.5 to 1% on the year. Coin's up 10% in the year to date. So don't say the word decoupling. That's another battle that was going on, but there is a change. There's a shift happening there.
Absolutely. 100%. Yeah, the performance has been striking between Bitcoin and the broader asset market.
Let's just summarize like super simplistically what we've seen this year since Trump got inaugurated. It was like all-time highs for everything. Then basically the market says, oh no, these guys are trying to reorder the global trading system, tariffs, trade wars. They're making all these comments that Stephen alluded to, Main Street over Wall Street, et cetera, et cetera. Markets drop by, I don't know what the S&P was down, peak to trough, 20% maybe. Bitcoin's down a lot. So that happens, and we've recovered a lot of it. At least Bitcoin is basically, I would call this recovering all of it. Do you guys think that we're like smooth sailing from here for the next year or two of this administration? Or do you think that was just like one mini cycle of the administration saying, hey, we're playing hardball. We don't care if asset prices go down. We have to do this to get what we think is better for the country?
It's a hard one. You're asking the real question, and that's a hard question. There's maybe a few ways to answer that. The first way to answer it is you have the roadmap of the first Trump administration, where he came into office, he started a trade war with China, he put tariffs on China, he did this whole thing. And then that kind of got escalated and he never revisited it. And you had a very strong stock market performance under the first Trump administration. So there was this initial acceleration of tensions, and then you never revisited it. The other way you could look at it is, hey, they've been very vocal about wanting to reorder trade, and that's not done. There's a lot to do there. Could you see another swing at it? Could you see asset markets swing down again? It's certainly possible, but it's very much going to depend on their action. And it's going to depend on how much tolerance they have for that sort of pain and sinking approval rating. You've seen him take a hit with his approval rating because of these economic policies. If I were shooting from the hip here, which I love to do, I would say
the vibe, Stephen.
Yeah, I don't think they want that pain again. That doesn't mean there'll be zero of anything. That doesn't mean they'll have no effort whatsoever to keep going down this path. I do think they got a little burned. I think they had their hand on the stove and the stove got too hot with the amount of economic pain and asset pain we were seeing. And I think they're going to be much more cautious to revisit that again. I don't think he wants to see a recovery in the S&P and then another shoot down to 4,500. That's just not my base case. It's possible, but I really think they got more scared. Scared is maybe the wrong word. It's not expressing, but they got more. The pain was too fast and too sudden compared to what they were trying to do. And I think they do pull back from that.
It's like we were talking about last week. tweets last few weeks, really, Besant is now in control, and completely different styles between Lutnick and Besant. And that we're seeing the more measured, less volatile or like aggressive sort of style of Lutnick now, and seeing something more measured. And I think the markets have reacted to that. Okay, we've got an adult in the room, a guy we really trust and who's really good at this. And now he's taking the reins, which is positive for the markets.
Very good.
Yeah.
What do you think, Alec?
Yeah, I'm still anticipating volatility. It's nice to see that it's calmed down, but one tweet can change everything, it seems. So expect more sideways chop, expect sharp shoots upward, sharp shoots downward based on a tweet. Definitely can see those things happening, but it's nice to see stepping in, taking care of these things. But I think Trump can get bored and he can start sending out some tweets that'll cause volatility.
I think that's well said. Yeah, I think more volatility for this year compared to years past in recent memory for sure. And then I know I asked you guys the question more generally, but if I was going to differentiate between traditional markets, just call it US equities and Bitcoin, yes, they move in similar directions at times, but I would highlight if there is going to be more volatility from either Trump tweets, trade wars, or concerns that we're entering some sort of recession just because the economy is slowing or because of the uncertainty from the trade wars, I would still be more concerned holding US stocks. And I've made this point before, but I'll make it again, because US stocks just have this like price to perfection valuations. It's like the smallest thing could set them off and they could fall by 10%. And it's not that crazy. Bitcoin, on the other hand, yes, it could fall by 10%, but there's just so many wild cards out there. We haven't even talked about the MicroStrategy conference, but there were 2 more announcements of these LBE, leveraged Bitcoin equities, companies that are going to basically become Bitcoin acquisition vehicles, run the MicroStrategy playbook. I think that's a huge factor. Like nation state adoption is actually in the cards for 2025. So we could see that world where, yes, trade wars are still going on. There's recession concerns, and that's weighing on US equities to some extent. But then you have these massive announcements of Bitcoin companies and nation states buying, and that could just outweigh what's happening in the S&P. You're probably not surprised to hear me say this, but would feel a lot more comfortable owning Bitcoin than stocks right now.
And I think that's right. I think US equities, and I think that's part of the changing market condition, is investors are realizing that Bitcoin actually doesn't have a lot of the risks that are weighing on US assets, stocks right now, tariffs, trade, earnings, valuation. Bitcoin doesn't really have any of that. And actually, it has idiosyncratic tailwinds from rising corporate adoption, rising international ownership, rising sovereign engagement. These trends all look extremely constructive, very positive, and it's sheltered from the worst of the negative impacts. So yeah, I think if you do see a second push down in the S&P, it's going to be due to recession concerns, I think. It's not going to be tariff driven. It's going to be, like a push to a low. It's going to be driven by like economic data deteriorating. But even then, the administration has an option to do stimulus, to do policy that can be supportive of counteracting that recession. And again, I think they would at this point, because I think, and I've heard this from people relatively close, the thing they truly fear is a recession. And I think they would be much more proactive at trying to halt that. Because if you think about it right now, he's basically saying there's going to be some short-term pain on Wall Street, but the economy will be better off for it. Mainstream will be better off for it. There will be jobs, there will be growth, there will be all of these things. And so if we take the pain on the Wall Street side, which isn't just Wall Street, it's people's savings, it's their 401k, it's their retirement fund, it's not just Wall Street. But if we take the pain there, and then he has to deal with, and it caused a recession, I think that's a political no-go zone. And I think they go quite hard to avoid that. And I think they do have tools in the toolkit. So I think that would be the thing that would cause it. But I also think they'd work very hard to avoid that.
One more thing that Stephen made this point, but I just want to underscore it. It is interesting to look at the order of operations of Trump 1.0 versus 2.0. The first big thing they accomplished in 1.0 was the Tax Cuts and Job Act the first time. And then they went to tariffs after that. I think this time they've said, you know what, they view it as let's take the bad medicine, right, of the tariffs. It's combating all these years of what they would say bad trade policy. They're like, let's do that first. And I think you're going to see the tax cuts and other stimulus measures come later in the administration. So that's just a different approach they had in Trump 1.0 versus now in 2.0.
Totally makes sense. Let's take a look at a couple of charts before we move on to other news. This is one of my favorites. We've looked at the MVRV before. This is basically a short-term hodler kind of ratio movement chart, and it shows that short-term hodlers are back in profit now. So basically gaining confidence. The market value is the total value of all Bitcoins in the current market price. And then the realized value is the aggregate value at which Bitcoins, based on the price at which they were last transacted. So it shows if people are winning or not winning, and is definitely an indicator. And I love these indicators along with the M2 chart because these are fundamentals. It's visualizing fundamentals. It's not like technical analysis. So I love these kinds of charts. And this one is definitely turning bullish as well. That's great to see. Let's take a quick look at this one. John, you posted this into the Slack channel, a chart from Lynn Alden saying that with March trade deficit numbers now in, the tariff front running is now fully reported. So April should be a spicy reversal as that's when tariffs kicked in. Any comments on this one, John?
Yeah, so this feeds into all the macro stuff that we listed off. It feeds into the Fed and Jerome Powell basically saying, hey, we're in wait and see mode. We don't really know how these tariffs are going to affect things. You can see some like interesting behavior over 1 or 2 months when here it's showing that there was tariff front running. So there was a lot of imports happening before the tariffs, but the tariffs kick in April. I don't think it's going to massively move the markets or anything like that, but it is interesting to see how companies behave in these different regions as they're trying to front run the tariffs. So just keep in mind that macro data is going to look probably pretty noisy if you're trying to compare like February and March to April and May. And that's going to be the case for the next few months here because there's policies that we're not used to analyzing.
And this was also the thing that messed up the GDP numbers. We had that real big negative Q1 print, but it basically wasn't real because the way they calculate GDP has like an import versus export function. And there were so much imports happening to front run the tariffs that it skewed the numbers. So John's completely right. And it has played into so much economic data, made it look worse than it really was.
BTC Prague, it's coming up June 19th through the 21st. It's the best, in my opinion, and from what I've heard, the consensus is the best Bitcoin conference in Europe. Those guys do a great job. We are actually working with the guys from BTC Prague to put together BTC in DC, which I'm super excited about. I think this is going to be a really important event. September 30th to October 1st at the Kennedy Center in Washington, DC. This event is designed to bridge the worlds of Bitcoin innovation and public policy. Perfect timing to bring a big Bitcoin conference to Washington, D.C. Excited about that.